Okay, recording. All right, the recording is started and going live.
Sweet.
In 3, 2, 1, and blast off. Okay, we're live. Welcome, everybody, to the fourth episode of the Crypto Flight Path live stream here on Twitch. It's Tuesday, February 9th. It's just after 3 p.m. Eastern. Welcome, Josh, and here we go.
All right.
Can you hear me?
I can hear you. We're golden. We're golden.
All right, good. Getting us started in the usual boring, sour way. Remember, do your own research, do your diligence, manage your risk, manage your counterparty risk. Don't trade with money that you can't afford to lose. Don't use your rent money, especially. And welcome everyone to this 4 days in a row now. This might become a habit, I think. So
That's the goal. Consistency,
yeah.
man. Right now we have
All right.
0 followers, and in 2 weeks we might have 2, and 2 years we might have 20,000. Who knows?
Who knows? But today we're going to look at some charts, talk a little bit about what seems to be a little bit of or what I'm observing across the board is that there's the earnings reports and the aftermath of the fallout of the Fed FOMC rate decision in tandem with Fed governor talking heads, the hawkish tone, and things going on in the earnings space, how equities are responding. And I will flip over to the FinViz screen here. Josh, looking at the Dow is currently down 203 points, or 0.6%. NASDAQ 0.75%, 89 points. I mean, not terrible, but it just looks like what I'm guessing is that the hawkish tone is just causing people to be a little more cautious, and fund managers and money managers at large are either rebalancing or reallocating to different sectors. So we're seeing price change to the downside a little bit, depending on what you're looking at. I'm going to pull up a NASDAQ futures chart, and I don't know that you'll be able. Actually, I'll flip it over on the other screen so you can see as well. But when you look at the NASDAQ 100, we've been trading in this channel for the last 1, 2, 3, 4, basically the last week, and it looks like at the beginning of the year we started pricing in a smaller size in rate hikes, not fewer rate hikes, but rate hikes that were going to be a little bit smaller, and the market's kind of priced in, it looks like, and the Nasdaq futures hit 13,000, have been pulling, drifting sideways a little bit, kind of like this distribution, what's the word? There's another word that this is escaping me now that I'm trying to say it, but I don't see. It doesn't look like we're rolling over in the sense. I know that the media might give us that impression, but I'll pause for a second, and from the standpoint of like the Fed policy and earnings and all that, is there anything on your radar that you think is that we should be talking about?
Yeah, so the thing that I was looking at today is crypto specific. It seems like what's going on with some of the things happening in crypto in regards to the SEC. It looks like they're coming after decentralized exchange. I think it just came across the wires that Kraken actually had a settlement with the SEC where they're not going to do any more stablecoin staking. And I'm not, correct me if I'm wrong, I don't know if it's strictly stablecoins or crypto staking in general. The exchanges probably care about this. I don't know that you or I care because there's all kinds of decentralized staking options. But what you're hopeful of in something like this is, okay, look, the SEC got their pound of flesh. They're not going to be able to stake on centralized assets in the United States. In exchange for that, maybe, we get some regulation that isn't overkill, right? I think the market kind of reacted a little bit to the Kraken news, especially the crypto market. I think it came down like 3 or 4% when the news came out. Now that was just starting right as we were getting going, but that's something that we've got to pay attention to. Nick Carter, we referenced him earlier in the week. He actually came out with a full piece on basically Operation Choke Point 2.0, saying that what the banks are doing and the government's doing is limiting and throttling access to crypto from crypto companies to banking. That's an issue, right? That's something where they're not going to come out and expressly state, look, we don't want this, but they're going to make it very difficult to operate, right? And so that's just something we have to keep an eye on and monitor. I think the market kind of looked at that, and then the news with Kraken, and it came off a little bit. But when going to the charts, I mean, we can talk about kind of a move that we just made based off what we were seeing. Maybe that's a good way to segue into talking about the trade that we just put on. And I think probably
Yeah,
when I pull that up on the screen, we can talk about that.
sure thing. I'm showing over on an excellent resource, Crypto Panic. I found two things of interest. One is to shed some more or put some more coloration on this whole idea of like banking being under pressure from the government. The headline here on Cointelegraph.com says banks under pressure from U.S. authorities to cut ties with crypto firms, and the blurb. Again, this is like a poor man's Bloomberg, man. This is great. Banks are allegedly being discouraged from offering services to the crypto industry by United States authorities. A little bit vague. Doesn't say if it's SEC or whatnot, but it just says U.S. authorities. So it has made it into at least into the mainstream crypto news this fine day that banks are allegedly being pressured, and anyway, it's not great, and it's probably caused some of the selling pressure, or I wouldn't call it selling pressure. It'd be the lack of buying pressure, and prices just settling back down to where liquidity is waiting. The other headline here is just oh, real quick before that, it looks like this Cointelegraph came out about 9 minutes ago, and about 40 minutes ago, the Kraken bit on CoinDesk.com. So the headline is Kraken agreed to shutter crypto staking operations to settle SEC charges. So it looks like the SEC came after them and said, what you're doing is wrong, etc. And they figured out how to come up with a solution here. And the blurb just says the following: Kraken's agreed to shut its cryptocurrency staking operation to settle charges with the U.S. Securities and Exchange Commission, according to an industry source briefed on the matter. Got some comments here, some unsavory thoughts here from Kevin_J. So anyway, I think it's not an accident, or it's not. We shouldn't be surprised. And I'll flip over to the charts in a second, but just to kind of close the loop on these two things, uh, the this, and I think that anything, or the thought I'm trying to formulate here is around, like, if it looks like anything FTX, or one framework that I have in my head right now is if it looks like anything that FTX was doing, then you probably shouldn't be doing that, and you're gonna now, with the collapse of FTX and all of the horse pucky that was going on there. It's now open season on anyone who's doing anything that's even slightly construed as offering yielding products and other things that could be construed as securities, with this the tailwind for the regulatory apparatus around coming after people now, and politically they have to, because of all of the folks that lost money or have money tied up in the FTX debacle. So, man, what a time.
Well, and what I'll comment on that a little bit. And I forget what I was watching. It was a former. I think the guy's name was Mike Mulvey, whatever his name was. We can find it if but it's not important. He was one of the guys that was way up, and basically with Trump's administration in regards to the SEC and all this stuff. Basically, what he said was that the FTX debacle gave them a reason, right? They were going to do this stuff anyway. Now they have a reason, right? They had this in their sights for whatever reason. They don't like this crypto staking thing. Okay, well,
Mm-hmm.
the exchanges, that sucks, but you know I think an interesting thing to think about here is maybe this is and I got this thought from Tushar Jain, who's a managing partner of Multicoin. He tweeted it out earlier if you want to look it up. Maybe people will incentivize people to take their assets off exchanges and stake in a decentralized manner, right? Because as somebody who does stake crypto, I don't do it on an exchange. I could care less if Coinbase or Kraken or crypto.com offers staking. It doesn't matter to me for the assets that I own. I can stake them in a decentralized manner and it doesn't really affect me. So, does this, I guess it gives us kind of an insight into what they're thinking with in regards to like the SEC and what they're going after. But I don't know that it ultimately, at the end of the day, this action alone, I don't know that it's that big of a deal. Uh, what do you think?
I think I agree that it's not really that big of a deal. Uh, I think this I think there's probably a reason they went after Kraken and not Coinbase or some other domestic. Oh, let me put it this way: the U.S. government can't go after you if you're outside the U.S. necessarily because they can't. I mean, directly. But Kraken is based, I think, in the or let me they operate in the U.S.
Yep.
Like there's uh, so they were probably an easy target, and I think that Coinbase is a good example of someone who's or an entity that's partnered with. They've made it in the interest of those concerned worth their while, and I mean that in the sense they might be spending their lobbying budget and their political contribution budget a little bit better than uh, Kraken is. I don't know. This is all hyperbole and hypothesis and hot air coming out of me. I don't know enough to know what I don't know if I'm even like in this if I'm even right. But I mean, the conspiracy theorist in me thinks that half of what was wrong with FTX was that they were able to grease enough palms to get people to look the other way. And the way things get done in Washington, having grown up in that area and lived there for 30 years, got to witness like the how the sausage was made and how things got done. So I don't have any proof of what I'm talking about, but that's what I think.
So you're saying they didn't pony up enough.
I mean, maybe.
Well, I just don't know why is crypto staking an issue? Why do they care about
That's a really good question to ask. Is
the
why
stable
is it
thing?
crypt?
The stable thing at coin thing. Sorry to interrupt, but the stable coin
No,
thing,
no.
I think I get. I understand why they might not like, you know, stable coins. But crypto staking, say I'm staking Ethereum on Coinbase or Solana or what do they care? Like, why does it matter to them?
That is the $64 trillion question. I don't know the answer. I think I also think this uh, going after the lowest hanging fruit is or the path of least resistance is also like modus operandi in the government sector because there's lots of battles that could be fought, but I'll argue that people in politics don't pick fights that they or people in the federal government apparatus, which is political in nature, don't go after or they don't start fights that they haven't are they're already won or don't know that they can't win because it's too costly in terms of time and dollars. And I think this is an easy fight to pick and win and be seen to be taking action and protecting the public from bad actors. Maybe I'm wrong, but that's what I think,
Well, I mean,
given the
if you wanted
question
to
that
be an
you're asking.
optimist, you could be if you wanted to be an optimist, you could say, hey, look, the SEC is now incentivizing crypto owners and stakers to control their own assets. They no longer have
There
the
you go.
option to do it on centralized exchange. If you want to stake, go ahead, but you have to control the assets. We're not going to let you be at risk to some centralized exchange. If you wanted to take the positive, optimistic path, there you go. Right. So
Now
as far
let's keep down this particular track though, because something you said a few moments ago is interesting. Is that you don't want to stake on Coinbase anyway. You want to stake on a decentral. You don't want to be in a centralized system, and all the
I
risk
want
that
to,
comes with that.
yeah, I want to stake somewhere where I control the keys. Like I don't want to, I should say, as much as I possibly can. Sometimes you take risk, right? But like staking on a centralized exchange versus owning the coins in a wallet and staking through that wallet, I think is a big difference, right? And so, I don't want to take it. We always talk about this. If you're staking on an exchange, you're taking counterparty risk, right?
Bingo.
And that's one thing that we always try to manage is our counterparty risk. So again, that goes back to the point. If you wanted to be an optimist, and you can say, look, this action by the SEC makes people now who want to stake have to do it in a way that they don't have the same counterparty risk with centralized exchanges.
No, yeah, I think that it's not so like to in the same way that FTX collapsing and the ripple effect of all that woke some people up about self custody. I think events like this, where the SEC is formally announcing that they're taking action, and this is pursuant or in reaction or as a sub or what's the word I'm looking for, as a result of Gensler getting on Twitter and recording some videos of him saying we are going to take action. He didn't say what they were going to do, but he formally again you don't pick fights you haven't already won or you can't win or don't know you can't win ahead of time. That's kind of stupid in business and politics. And you know, remember every action that people take in these these legislative actions, uh, somebody's wallet gets lighter. So you have to be careful who you go after, because if you go after the wrong people, then they make your life hell later on because they don't like the fact that you ruined a business or an industry for them. Uh, a friend of mine, his name's David. He uh, he started a business last fall doing something that was in a medical devices company. Just a great example of how these legislative actions or these executive orders, especially the executive orders, can wreak havoc. He started this medical devices company and he quit his job selling real estate, which is how I know him because he's a realtor, and got into this medical devices company, invested like $50,000 to $60,000 in equipment. And then with the stroke of a pen, because it was an easy political win for the Biden administration, with the stroke of a pen, President Biden legislated that certain types of insurance weren't going to be able to do certain types of things and literally put the guy out of business. And he could no longer leverage the healthcare system to be able to literally foot the bill because those were medical devices for feet. So, foot pun intended there. But the the Biden administration had a bigger agenda, and they didn't care who they trampled on to get what they wanted, uh, because somebody loses, and in these like somebody is losing today because of this action by a government agency. In this case, it's
So,
the SEC
so
going
what you're
after.
saying is you don't share my optimistic view.
Uh, I like your optimistic view better than the one that I'm talking about.
I don't think
I
the
like that.
optimistic view is realistic. I just want to, if I was going to put the case out there as to why this might make sense, But again, what do they say? Strong opinions loosely held.
Yeah, I mean, I think maybe it has, maybe that's the intended effect, is to posture this way and to really like ignite the fire under these DeFi folks who will innovate around making it possible to stake decentralized in a decentralized way, where the SEC and the government can't really, they're impotent to do anything. Like they're rendered impotent and they can't do anything about it because
Well, yeah, they from a public perspective, they could say, "Look, we don't have any control over this. There's nothing we can do." Right now, like I think that's extreme. Like what we're talking about is extremely optimistic and very favorable view. I don't think that's what's going on. I think more of what you said is probably accurate. But it is interesting to kind of talk through maybe reasons why or what are they thinking. But at the end of the day, it doesn't matter, right? Like it happened. We've got to deal with it. We've got to react now. The market's reacting. This is something that happened that wasn't around yesterday. It is around today. So what do you do about it, right? Like, you kind of
right.
gotta. I guess that's a good way to transition into the chart and the trade we just put on and talk about kind of our thoughts
Yeah.
behind why we did that. And Uh,
All right.
I'll let you take it away.
I'll head us down this path. So, Ethereum, the chart we're looking at a tweet from the old Horn Hairs at Crypto Horn Hairs on Twitter. He's drawn out here, uh, pretty clear line of resistance, but also higher lows as this starts to coil into this point where like a decision is going to have to be made. The market's going to have to make a decision: is it going higher, or is it going lower, or the liquidity, like the or larger amounts of liquidity will show itself and it'll move. But the thesis is that this lower line, this lower dotted line here, and I'm looking at the tweet, Josh, for the record, real quick.
Yep, no problem.
The is showing that the lows are getting higher and the resistance is pretty clear, and it's been coming back and testing this like upward green line here. And I'll change over to the charts now, uh, and you should be able to see the TradingView chart as well, Josh,
Yep.
which has the position that we just put on. Again, trade at your own risk. We're playing this idea that this lower trend line that's been, or this lower line of the wedge has been acting as a pretty strong level of support. We had on FOMC day, we perked up a bit. A lot of buying came in, or a lot of shorts getting squeezed out, or they're willingly taking their short positions off. And then we've been kind of floating sideways here for several days. And this is a 4 hour chart. I like looking at 4 hour charts. It's just a personal preference. But interesting that on the news like today, on this news of the SEC and Kraken and all that, we had this pretty, I mean, I'll call it a relatively sizable uh, 4 hour candle moving back down towards the lower end of this wedge. And I think the RSI and this coming back down and touching this low, we decided that um, we would we would long ETH USDT with a relatively tight stop. So this is what you're looking at here. The risk reward drawing is a 3.7, basically close enough to 4. I'll call it. So 4 to 1 risk reward. Uh, I think I might have moved, so forgive me. This was supposed to be 1680 up here. Sorry, got a little heavy-handed. So, uh, the thing I'm trying to communicate is that we thought that with this really well-established resistance line would be a good area to take profit. Now, assuming that this trade plays out the way we like, it might collect here along and climb back up this line and then make a move back up here to retest the high to see if the resistance level is gonna at 1680 is gonna hold. And if it's gonna get rejected again, we might see a much more substantial move lower. And I guess all that to me would signify is that the that the lion's share of liquidity is just waiting down here for a more substantial pullback. But in following our thesis here, we think that this is a reasonably sized, reasonable risk reward ratio for a short term long trade. And I'll flip over to the daily chart and give you another perspective on this. If you look back over here to all the way to January 19, and you can see this are still correct.
Yep, I got it.
Okay, good. All right, so if you look at this move that began on January 3rd, is a Thursday. This is one of the weekend pumps that we had, or a pre-weekend pump that was preceding the Fed. Uh, this channel, this price action started to develop, and so zooming out a little bit on a daily time frame, you can see that we're initiating our long position in what looks like a continuation of this. So we had this big move up, probably lots of bias going from short to long, lots of either people getting short sellers getting forcibly liquidated or flipping bias based on the volume that was coming in. And these are daily candles. I mean, this is a pretty strong move. Not gonna lie, or at least that's the way I see it. And zooming out a little bit, you see that in the like this giant wedge has been forming since last. I mean, last July, and we had this huge move lower to like sub 900 Ethereum, and then even with the collapse of FTX, we could only get down to basically 1,000, or we call it 1,100. It's close enough. So even with all this disaster and death and destruction in the world, we still couldn't go any lower. And then it still didn't go lower here. And then we had this big when SBF went to prison or whatever. I forget or basically the start of the year. We got this big move back up, and we reclaimed this area that was highly contested for a while until it broke. And what I'm looking at is that if we continue to go back and forth in this wedge, then that 1680, which is up here, if we finally get outside of this, that's going to signify that the market is ready for this to go higher, and being short will get very, very expensive. So that's my like armchair quarterback's analysis of this price action, which led to me taking my retail trader instinct was that, oh my gosh, this is going lower. I should probably get short to say, well, hold on a second. We had some really interesting news here, and we're still in this perfectly reasonable range where people are money is being made here in this range. So where do we take? Is there a position for us to take? And we think there is, and this is our bias for the short term to take this trade.
Yeah, and we're fine taking the trade with the understanding that, look, we may be wrong, and that's okay. But when we're wrong, our downside is capped. Like, we're not taking this trade. We're not YOLOing in with our entire account balance on 100x leverage, hoping to get rich on one trade, right? These are well thought out, calculated entries, and there's an exit planned, depending on your position size, right? Like, but this is what kind of what we want to articulate to everybody that isn't part of what we want to do is kind of help people learn to trade and learn to manage risk. And no, you're not going to get rich off this trade, right? But what you're going to learn to do over time is analyze these trades, see where you have maybe a slight edge, and see what works for you. And when you are wrong, that's okay. You're not blowing up your entire account. You're just taking a thought out risk to be in the market if the trade does go your way, right? Does that articulate pretty well what we're thinking with this, Ted?
It does, and so excellent. I thought that was well stated. The other thing to articulate here is that for this particular, I'll just dissect this risk reward drawing. This is a long position. Uh, Trading on KuCoin happens to be where my position is, and we're trading in lots, and the lot size on KuCoin is zero point zero 0.01 ETH. I'm going to go back and double check that. 0. Yeah, 0.01 ETH is the lot size. So when trying to the whole point of this exercise about using this diagram to figure out a good risk reward ratio, like basically anything above 1 to, or anything 2 to 1 or greater is worth taking. I would argue, I'll pause for a second and say, if you're looking at a trade and the red box is exactly the same size as the green box, that being 1 to 1, and you're risking 1 unit of, like, say your 1 unit of risk to the downside is $20, and you can say, well, I'm risking $20 to make $20. Does that make sense? And most would probably argue no, because you could just keep the $20 that you have, take zero risk, and you still have your $20. You didn't have to take any market, you didn't have to put the money into the market and take any of the risk that comes with doing that. I guess the objective here is to take, for every 1 unit of risk that you're willing to lose, if it doesn't go your way, you want to get at least 2, but maybe 3 or 4, sometimes 5 units of risk back in the form of a winning trade. And the way this is structured and set up is that for our in the math, to make it easy, is that we have $1,000 USDT account size with the lot size of 0.01, and we're taking a maximum of 2% of risk of our total account size. So in this case, it's 20 USDT. So we're starting this trade with 1,000 USDT. We know that if it goes and hits our stop loss order, gets triggered, it'll get us out, and we will have only lost 20 USDT to test this idea or try this idea. Now, that's 1 unit of risk to the downside is, in this case, 20 USDT. Now, if it goes the other way and grinds its way back up, which it probably can, based on what the chart is suggesting, again, everybody looks at the chart and sees something different. So maybe someone's looking at this going, this is insane. And hey, that's all right. I mean, I've been wrong about being right before, and I've been right about being wrong as well.
Sure. No,
So what I'm suggesting though is that if this does grind back up and we do hit 16, my take profit here is 1680. If that happens, it says that my account size will be 74 USDT. That means that I risked losing 20 USDT and ended up gaining 74. And if you calculate the ratio, that's 3.73 to 1. That means this was a three times my risk winner. So the risk reward ratio in this case would be considered favorable because you're risking 1 unit, but you can potentially get back 3. It just, at this point, it's out of our control where the price goes. Now we
it's
may,
in God's
and
hands.
yeah, exactly. It is. It is literally in God's hands at this point. However, what's nice about this, I'll talk a little bit about like this. This helps take some of the emotion out, or it takes some of the extreme or the more challenging emotions out of the picture. Because, and what I mean by that is if I were to put this trade on with no stop loss or no take profit, and hoping that I'll flip over to the daily chart. And if I zoom out a little bit and think, okay, I'm gonna initiate my long position here, and I want this thing to rip all the way to 2,800, and I want to be able to take the month off. But I mean, what's the likely? I mean, like in terms of probabilities, it literally has a long way to go. What you don't know is how much FUD in the media, how many hedge funds are going to have to take profit, how many people are eyeing this thing that they want to short the crap out of it, and how much size can they put behind. There's so many variables. It's impossible to know very much about the other market participants around the world. It used to be you were just trading against people in your own country, but now you're trading against people and robots around the world. So if I didn't have any rules or structure around how to deal with all the things that I don't know, we might be tempted if price were to start moving against us. We might think, oh well, I'm gonna average in at a lower cost because it's going higher. But what happens if it keeps grinding back down and you just get your loss just keeps piling up until eventually you get forcibly liquidated because you don't have enough money in your account to support the trade. Oh, sorry, I didn't mean to click over there. But again, the this idea of taking a trade that has a very well defined stop loss parameter that is 1 unit of what might be like, for example, a 3 to 1 in this case, 3.7 to 1. The thing that it takes, like, you've made your decision, you're going to let the price action play out. The thesis is intact until the thesis is not intact, and then it plays out, and I'll go back over here to where the box is. You either make your money or you only lose a little bit, and then you recalibrate your bias about where price action. Now that price has moved and it's gotten you out of your trade either to the upside or to the downside, you still have trading capital available. You can still try another idea. This resets the clock in a manner of speaking. It's a whole new opportunity because the price is now in a different sector or zone and conditions are different. This is just a snapshot really in time of like what we're thinking right now today on the 9th of Feb. It's Thursday. It's about 20 minutes to 4 p.m. Eastern. And we're kind of just in this trade is kind of like holding at the entry price. I mean, I'm 0.17% in the negative, so I've lost 23 cents. so far,
Well,
meaning we're
and
well within.
the rationale behind the risk reward is that it allows you to stay in the game, right? And so, if you're
That's
looking at
right.
this and listening to this, it should be abundantly clear, by the way, if you're going to try to do this, this is a job. This isn't something to kind of do on the side, right? Like this is something you have to put serious amounts of time and effort and energy into to be good at, right? And that could be a couple hours a day, right? You can start off, kind of doing it that way, but this isn't something to kind of just what we always talk about is, counterparty risk and your risk in the trade. Well, part of that is like if you're going to try to do this, you really need to take the time, start with a small account like we're doing, manage your risk and really try to learn this over the course of 6 months to a year before you get in there and start going crazy, right? Because chances are, if you get in, you don't practice, you don't take any risk management measures, you don't understand the market, you're going to get wiped out, right? And so, for every one person that, makes it in crypto, just flat out gambling, there's 10,000 that don't. And it's unbelievably important to understand that when you watch this and look at this stuff, it's something you really got to put some time and energy into. And trading is much different than buying Bitcoin and holding it for 5 to 10 years. And it's something you'll hear us talk a lot about is the differences between trading, which is what we're doing now, trying to trade for income, versus some of these venture style bets that you can make in the crypto thing. They're two different. I would actually equate it to residential and commercial real estate. They're both real estate, but
Hmm.
they're two different businesses. That's exactly what this is, right? You're trading. This is all crypto trading and venture, but it's two different business models. It really is, and so that's just something to keep in mind. If you're watching this and you said, "Yeah, I want to YOLO into this trade," and part of the reason we took the trade today is we've been watching this thing for a week, and we got the SEC news and it retraced back to the bottom channel, and we figured that was a good entry point. So it's not like we just woke up today and said, "Hey, we're going to take a trade." There's a lot of things that had to happen to enter that trade too, but all things that you learn over time.
Yeah, I drew out here a thesis. This is what we are hoping can happen. We don't have any guarantee, but the looking back at how on this daily chart the price action has trended in an upwards direction. It's 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 gotten a little excited, a little ahead of itself. It's pulled back. There's been some momentum. It's pulled back. It's been some momentum pulled back, and this line suggests that there are buyers that are sitting down here waiting for price to come back into this zone before they will initiate long. And then there are also what you see with it bouncing off of this top end of the range here, people that are initiating short positions and understand that if the market is trading in this range, then you sell it up here and you cover your short or you close out your short down here, and then you might flip long. But the thesis here is that we would now this assumes that we don't just roll over and take out this line, and this completely invalidates the trade. This happens all the time, by the way. Your ideas get thrown in the toilet. It happens, but you readjust. The idea is here we would grind back up a little bit, pull back, grind higher, grind higher. The 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 sentiment might change a little bit. I mean, it's if you've read, there's a book called Reminiscences of a Stock Operator. Uh, Google it. If you read, there's this character, Old Chappie or whatever. I think his name is Old Chappie. He's the old guy. Anytime the dude interacts with him, he's like, "It's a bull market, you know." And no matter what happens in between, it's still technically, we're in an uptrend here, technically speaking. We grind higher and then we retest that resistance level at 1680. And if it gives way, that means that the downward pressure has been invalidated, and the liquidity, like the market, the price in the market will chase liquidity higher in this case until it reaches a point where it runs out of steam, move higher. But this is today's thinking, and if price violates this, then let's assume or let's hypothesize that we get stopped, and then price starts to head the other direction and retests this level and becomes resistance. Then we know that The market is rejecting the idea that it can go higher now. And if the market's not ready, the market's not ready. Uh, One other thing I want to show real quick, if I still have this risk reward box here on the sushi swap, so sushi USDT. We talked a lot about how this had been consolidating in this wedge and it broke way out. We tried to sell it here, got stopped because the market was not ready to roll over. Now I'll just say it, I was early. I was excited. What was one thing that I got some points on is that I had a stop and I didn't violate my rules. And the rule said if it goes against you, you're out. And I got out on this candle here. It subsequently came back and retested this level here, and you see that today it broke. However, we drew this box over here, this 4-to-1 trade risk reward ratio long, with the hypothesis that now is no longer valid, at least not today, it's not valid, is that this area would be support. And if we had longed this, we would have gotten stopped out today because our stop would have been at our stop would have been at 130 and price touched 127, and which seems cruel, but we were just our idea was just early. That said, if we look at where price came back to, it's now kind of testing this like middle zone. If you look at like the where price collected in these areas here, it rallied a little bit, it pulled back, it rallied a little bit, it pulled back, but all around this where this wedge starts to come together, I'll argue that just because I'm only human and I don't know everything, I didn't know the SEC and Kraken were going to settle today. I didn't know this 4 days ago. I thought this
Sure.
would be a good idea, but the thesis got invalidated. So now we're looking. I'm gonna move this now. Actually, what I should do is I should just duplicate this tab so I don't screw up my drawing. But what I want to show here, and I'm going to change the time frame on this a little bit so you can see like a bigger picture. Like these, this is just a pullback. Like I tried to sell it here, I was just too soon. I could have waited a day or two and then ridden this move. Hindsight analysis, obviously. However, what happens when I drag this box down here and reevaluate my long thesis to say now that we've pulled back to a congestion or area of value where price hovered, that's about half the size of this here wedge. If I change this line a little bit there, if I draw it like this to say, looking back to the third week of January, we've been like kind of collecting around this way. Another idea could be that we use this former level of resistance as a place to take profit and maybe tighten the stop up quite a bit. So now if we do this, we've got another idea that suggests if it comes back down and settles here, we might have a 4-to-1 long idea that could, and probably a little bit smarter would be to do it like 3-to-1, just because these are pretty strong resistance levels, meaning price could have continued, but it didn't. It got rejected here. It got rejected here. It got rejected here. It definitely got rejected here. But let's assume that this like price settles and we got long here. This is a perfectly reasonable, in my opinion. Like another thing that I always think in my head is, even though I can't be somebody else, uh, did some time at a hedge fund and would run trade ideas by the big boss all the time, and he would largely not take them. But it wasn't because he didn't think that I was right. It's just his area of focus was a little bit different than what I was focusing on. I was focused on U.S. equities. He was commodities futures and interest rates futures trading. But the point I was trying to make is that he never once ever said to me that this idea is stupid. It was more just you don't know where the market's going to go. What you do know is that you have control over how much risk you're willing to take, how much you're willing to lose, and then where should you consider taking your profit, especially in markets like these where you're not getting, you're buying a sushi swap token, yes, but you're not buying shares of stock in a company, and you're not earning a dividend as a yield or anything like that. Being this is the short-term trading is just mostly speculative, in my opinion. Tell me if that's like a wrong way to think about it, but that I think that this is a perfectly valid idea to try. and we won't know unless we try it. So maybe later over the weekend or next week, as we get a few more days worth of price action in here, we might see this set up. So that was another idea that I thought was brewing for a potential long.
No, that's very, very interesting. No, I like it. And no, that's exactly right. What we're doing here with trading is we're trying to make more US dollars, right? We're taking US dollars and we're trading against cryptocurrency and trying to earn more US dollars, right? And so my objective in that is to earn more US dollars to buy more crypto, more Bitcoin that I believe in. Uh, again, I like the analogy of commercial and residential real estate. It's both real estate, but they're different worlds, and this is very similar. The strategies that we use in trading on the short term, from a day to 2 weeks, will differ in what we do for the long term. Again, same industry, different worlds, right? But I think it's important to clarify that what we're doing here specifically is trying to accumulate more US dollars.
Yep, I wholly agree with that. In this context, like I'm a Bitcoin nerd. Uh, I'm all about getting my hands on some more Bitcoin to hold for at least 2032. And then maybe I put it up as collateral for substantial amount of loans. I don't know. That's not
That's
financial
right.
advice. That's
That's
not
the dream.
anyone's. Okay. So, but I want to point something out here that I think is hard to ignore. Starting on December 31st, okay, the last day of the last year, there was this candle, kind of an indecision candle. The body of the candle is like right in the middle, and then you see what happens on the first day of the year. This is a Sunday, no less. Okay, buying starts coming in, and the volume starts to kick up here. Okay, you see that price, the low of the day tends to has for the first week hovered around this line. Now we couldn't have drawn this line necessarily on January 6th. I'm saying in hindsight, now that we're February 9th, so a month later, you see that price really started to like deviate to the upside from this line. Okay, so the deviation to the upside indicates strength, and you see that volume started to pick up because it got more attention, and the RSI definitely showed where it got into it got on the daily time frame here, a little bit overbought here, but this deviation to the upside was pretty substantial. And once we reached, again, I don't make the rules, man. I just try to point things out. We got back to a level which, in a previous iteration of being alive and looking at markets, back on November 22nd to December 6th, there was this zone where price just kind of collected. A lot of like distribution and consolidation was going on before it decided to go lower. And I guess the November was, yeah, this was FTX. But what I'm trying to say is that price got all the way back up here, right in the middle, no less, and then there was some correcting, or even before that, there was some correcting. 3 or 4 days of profit taking, probably some people getting short here. The big boss used to love to say, and I like saying this too, is that what we really need is for a bunch of people to get really short right here, so that they can get squeezed out and we can move higher. That was one of the things he liked to say. Anyway, we had some profit taking, consolidation, drifting back down towards a more neutral average price here in an uptrend. So from the first day of the year until today, even though this looks like a big nasty move lower, we're still in an uptrend. I mean, until this changes, it hasn't changed. Is a stupid way to say it. But then we started collecting around, again, this previous areas here. We started to go back and forth and back and forth and back and forth, and that's where this wedge started to like show itself. Now we could have draw. I'll go back over here and just cut off that side. Now, if you can't see that big green candle to the upside, you look at this. You can draw this wedge at this point. You can see that the wedge exists, and the thesis is that if it breaks out above, then hey, that's a very strong bullish move. You get long. If it's going up, you buy it, and you keep buying it until it stops going up, and it eventually stops going up until about the 163, 164 mark, which coincides with another like hotly contested area. A lot of chop back and forth over here. But this support and resistance stuff is just magic sometimes. And then you see since what was this? This was last Thursday, so it's been a week now. We we tried to sell this, it didn't work, and price has been drifting back down to this where these lines meet. Now, this will be a decision point. If it goes higher and we get long, then our thesis is that we can ride this back up into the resistance area and take some profit maybe. If we're wrong, we only lose 2% of our trading capital and we survive. We live to fight another day to take another trade that may work out for us. And this risk reward ratio thing is really magical. What I want to try to articulate here is this concept that a gentleman by the name of Van Tharp, VANTHRTHARP, Van Tharp. If you Google Van Tharp, he wrote a couple of really good books. But the concept of system expectancy is one of the things that has stuck with me over the years is that as I've wanted to do this more and more and more and more, is the idea that system expectancy, if you have very well defined rules that you can do some back testing with, for example, then, or even if you don't do back testing, you can literally flip a coin. And where I'm going with this, Josh, I think you'll appreciate this example, is that he has his students do this where they will flip a coin, heads you go long, tails you short, and they'll do this with paper trading accounts. And they'll initiate long positions or short positions based on the coin toss. That's the determining factor. And he says you will enter your trades on paper, your paper trades, not with real money. Although you could do this with real money if you were so bold. I do not advise this at all, unless you really, really want to have some fun and test your mettle, as it
Hey,
were.
I'm not
You
above it. I will definitely try it.
but listen to this. This is where it gets really interesting. That the coin flipping part is not even the interesting part. The interesting part is that if you use the one like this unit of R or risk, a unit of risk, 1R, if you only lose 1R on every single, let's say you flip the coin 50 times or 100 times,
Yep.
and when you're wrong, you only lose 1 unit of risk, and then any other time that you are correct, you're anywhere between a 2-to-1 and a 4-to-1 winning ratio. And I've done this. I did this with dollar yen spot trading in a paper account for, I don't know, 7 weeks, I think. Man, it took a long time to do, but I was wrong. And he says you can be wrong 6 out of every 10 trades that you take. And you're only right 4 out of every 10 times. Think about that. And your system expectancy is still that you're a profitable trader. And that's with the coin toss being the determining factor, meaning you're not looking at the chart like we are today, going, price action looks bullish. We're on an uptrend. Yeah, we only deviated 1 standard deviation instead of 2. Any of this analysis that we're performing, again, we're just looking at pixels on a screen, for Pete's sake, as well. Do we have any like control over this? No. But flipping a coin to make your long or short position decision, and then having a very tight rule set that only lets you lose 1 unit of risk each time, was still profitable with a 60% loss rate. Let that sink in for a second.
I think that's amazing. I mean, that's huge, right? I mean, because that tells you can lose more trades than you win and still be profitable, right?
And I can promise you that as a retail trader, I lost more trades than I won.
Sure. Well, you're
And
going, yeah. I mean, we don't have the information we need to make the trades where you're going to win 7, 8, 9 out of 10 times over and over and over
right,
again.
we're not the Ken Griffins who are paying for order flow to come in so that we know ahead of time where retail traders are positioning so that we can take the opposite sides of their trades, so that when they get emotional and they see a candle, they see this big red nasty candle in a vacuum. And what I mean by that is they're looking at this and they're going, oh my God, this thing is going to zero. And they panic and they dump their long position. Now remember, when you're initiating a long trade, someone is selling you something in return for your trading capital. So who's taking the other sides of the trade most of the time? It's the market makers, like the citadels of the world, are paying for the retail trader order flow so they can know where they need to be positioning, and they're often the ones providing the supply at these levels when people are panic buying in because they think this thing's running away from me. I better get in. Now, I'm not saying that when a trade is moving to the upside that you can't take a swing. If you don't swing the bat, you never have a chance to make even a base hit. So, what I'm trying to articulate here is that when we do take the tact or the tract or the English language, when we take the track of we want to analyze this and make some fundamental assumptions based on nothing more than what the price action is telling us, and then looking at a little bit at like news and headlines and some of the emotional drivers, we can see that the risk reward is actually pretty favorable here, in my opinion. Again, not trading advice, not financial advice, but trying to buy it up here would have been bad. Selling it was a much better idea. I was just early. It's now pulled back to this area of value where the market was saying we support the price here pretty heavily. It's testing that support level. If there is enough liquidity that comes in and buys this up and says, yeah, we like it at this price, then it has a potential to move higher until something else changes. And the only other way for it to go would be lower, but it's not looking, it looks more probable that this is just a retest of this upward trend, in
Let's
my
go.
humble opinion.
Let's go back to the system expectancy thing. And the first thing that popped into
Sure.
mind when you said that you just need 4 out of 10 trades to be profitable was we need to make more trades. And so, if the system expectancy thing plays out and you back test it and you know that it works, right? How do we put on 10,000 trades, right? Is that where you come in with a bot? Like, is that what?
Yeah, a bot that can move in and out of positions 24 hours a day theoretically can. I mean, well, think about it. If I'm only, and I love to sleep way more than I probably should if I want to do this kind of thing more often. But my point is that in 24/7 markets, there are opportunities that present themselves when we're sleeping. Like for example, I'm on US Eastern time, and when ROW rest of world is awake and putting their money at risk, the I'm not awake to participate. Like you got to be at the controls if you're gonna you know have a shot, unless you set order types of a certain kind that can get filled and then can get executed based on market conditions, basic rules. If you set a buy stop order above the market, that when the market gets to that, it gets you in, and then you have a corresponding stop loss and a take profit, perhaps. I mean, at a minimum, the stop loss order, that if it goes against you and you're still asleep, you're not losing your entire trading account or having to, you know, mortgage your house to pay off your margin debt. The point I'm trying to make is to really validate what you're saying, or say that I agree that to increase the frequency using a trading system that has or basically a trading robot that can follow price action on a chart, and then have a script that interprets the moves based and maybe compares it to indicators, or where it's falling and what the indicator, like the RSI, will change over time, the volume weighted VWAP, volume weighted average price, or the stochastic, or what's
I
the
mean,
cloud,
is
Bollinger
that even
Bands.
is that even possible? I mean, am I trying to think about something that's like, yeah, no shit, Josh. Like, yeah, we'd all love to have a trading bot that, we just set and the thing went out and we had an, expectancy and we knew that it would be profitable, over the course of time. I mean, is that something? I mean, can you pay somebody to do that? Like, I'm just genuinely curious, like, because the only way I can think there's one of two ways, right, to really make this thing work in a way that like makes a lot of sense. You either need to make more trades if you're going to expect to be profitable, or increase the size of your trades. Is that the right way of thinking?
I think well, to answer your question, it's on our, I think it's on our radar to do a video or to talk about some YouTube videos where we've we have evidence that if you have the right tools in place, you can use TradingView scripts to, when certain conditions are met, it will initiate an alert. And the alert, this is where it gets interesting. So my background is in software, and I understand, I don't know how to write software like a real software engineer or developer can, but I've worked for almost 25 years with software people and people that use software. So I understand some of the psychology about applications and like what makes them good and what makes them not so great. So this is an excellent thing about at least I think it's excellent. So in TradingView, there's a lot of capability in the alerting apparatus. Uh, when an alert gets triggered, you can have it initiate what's called, or you can have it execute a URL, something called a webhook, and the webhook can then communicate with your trading platform using what's called or it's called API level access, meaning system to system integration. Meaning one system can programmatically speak to another over the internet, and there's a way to authenticate that uh, robot, and without, for lack of a better term. For example, if you have uh, Bybit or Binance outside the U.S., just caveat in here, and you initiate or you enable API access in your trading platform, and you set trading. There's some really good videos, and I think we should devote a whole session to this. Really good videos around scripting TradingView, that when alerts are triggered, it calls a webhook, and the webhook talks to this intermediary, this thing called Wick Hunter. I think I can pull that up here. Wick Hunter. I think it's .com. We'll find out. So I'm on the news tab here still. Oh no, I'm not. You can't see that.
It's
Wait,
wickhunterio.io.
yeah, there it is. That's right. Give me a sec. I inadvertently closed out my darn tabs, and that was shame on
Yeah,
me
see, this is
for
what I'm
getting.
talking about. Automate the crypto trading.
Yep, I'm gonna give me
I
a
mean,
sec to.
this seems like one of those things that's too good to be true. Like you just create a bot, it trades for you, and you make money. Like, is that fantasy world?
It's not fantasy world. But give me a sec to. Made a rookie streamer mistake here. I'll. Oh, it's still working. Okay, good. Uh, oh, thank goodness. Did I just? I think I just got too excited, and
Well, yeah, the idea is really exciting.
what I'm trying to, or the thing I'm trying to. Wait a minute. Why is it? It's still showing the thing. Okay, maybe I'm drunk.
You see the movie Stealth with Jamie Foxx?
I think so.
It's about an AI that controls a jet. But anyway, the jet ends up telling the pilot the thing is Eddie. The AI's name is Eddie, and it says
Eddie.
Eddie is the whole idea. I mean, I mean, automated crypto trading is the idea, right? Like that's because they can operate
Yeah.
24/7. I find it very hard to believe that you could set up a bot and it could be profitable. Not you, just anybody
Well,
in the world.
I'm with you. Like it's not intuitive in the slightest. It doesn't like really make sense on the surface. But what I'm hopefully I can get this. Okay. So what you should be able to see now, if you're watching this broadcast, is wickhunter.io, and this platform makes a bold claim. It's not really that. I mean, I've seen this work. Is there's a YouTube. I got it. I'll find it. We'll do a whole session on this because this is really cool stuff. Basically, the Wick Hunter platform, and I'm going to try to use my hands to articulate this. You have your trading, your exchange. Like KuCoin is a great example of or Bybit. Uh, this is the place that you would execute an order to say, I want to either go long this position or I want to short this other position, and all of the different order types that, I want to take profit, I want to stop loss, et cetera, et cetera. Then you have TradingView on the other side over here, which is your charting platform, which is what we're looking at here at this sushi USDT chart. Okay, but back to Wick Hunter for a second. So TradingView is over here. Your exchange is over here. Wick Hunter falls right in the middle. And the Wick Hunter, the promise of Wick Hunter is that you can write some scripts, which can already be done for you. There's discords that have this stuff for sale and other stuff that's free. There's a bunch of free stuff on YouTube. Got to do your own research again. Be diligent. But your trading or your charting platform like TradingView can be scripted as such to initiate alerts that call webhooks. And what I mean by that is they talk to Wick Hunter and they tell Wick Hunter in the middle, which is authorized to talk to your trading platform programmatically
Ted, I don't know if
with
you
this
can hear me,
API.
but you went full matrix there for the last like 10 seconds.
I'm not surprised. Can you hear me?
Yeah, that's much better. Yeah.
Okay. Wick Hunter's in the middle. TradingView is on one side. Your exchange where you execute trades is on the other. Wick Hunter responds to alerts, which trigger webhooks on the Wick Hunter platform, and then the Wick Hunter platform initiates orders. It says open a trade for this, and these are the rules: take a profit, stop loss, and on this instrument. If you get another alert that says take another position on this other instrument with these parameters, it can initiate, and it can do this 24 hours a day, 7 days a week, and you can be putting on multiple trades in multiple pairs or multiple instruments like Sushi, Tether, USD, or excuse me, back to the chart. Let's go back over to our Ethereum trade, see if that's working. I think it might be it's kind of stuck here at the moment.
Yeah, it's just
But for
flat.
example, this could have been, this trade that we just put on could have been initiated based on a TradingView script that met some conditions that fired off an alert that hit a webhook on Wick Hunter, and then Wick Hunter could have asked the trading platform to execute that trade with the proper risk management controls in place, and then
That's golden.
you let it
Like that's
play out.
amazing. That's amazing.
Yeah,
Like,
so this is that thing I was telling you about before. I can't remember the name of the YouTube channel now, but let's let's endeavor as a team here to put together a review of this. We'll unpack this video. Maybe we'll watch the video and we could talk about the different components. But this Wick Hunter piece is one of those pieces that is only going to get. I mean, it only works with a handful of exchanges right now. I think it works with Bybits. Yeah, Binance outside the U.S., Bybit outside, and Finandi. The challenge here is that these are outside the U.S. and sometimes caveat this and disclaimer: I'm not recommending you use a VPN to get around the law or anything like that. But in some cases, it's necessary. Depending on, I don't know that Wick Hunter is the only game in town either. I haven't done enough research there to determine if that's the case. So
yeah, I
anyway,
mean,
just a
disclosures aside, whatever, it is what it is, right? Like,
yeah. So another just a recap. We could have, we started our long here. This TradingView by way of the Pine editor is the place where you put your scripts. So you can put language. Look, it's called Pine script. So you can put Pine script language in here that responds as price action data is flowing in from TradingView. It can evaluate from one tick to the next or 1 minute to the next, wherever the rules are, the price data compared to a list of conditions that you've mapped out. Now, this is where having some savvy with scripting languages is helpful. However, in the video that we'll unpack in a future live stream and YouTube video, This fine gentleman shows how you can use ChatGPT to ask it to take a basic code block that you didn't write and to write some more code that will yield an initial result. And then you have to do some fine tuning. But this video is comprehensive, and this fine gentleman has a Discord. And actually, I'm gonna look it up right now.
Well, yeah, and while you're
It's
doing that,
called Trade Tactics. That's it. It's a Trade
if
Tactics. If you YouTube, find him on YouTube, find him on Discord. It's all the good stuff.
if I can learn to do this, anybody can learn to do this because I am not technical in the slightest. And uh, part of me thinks that like, to be successful moving forward, you're going to have to implement some sort of automated trading. Questions I have are how detailed do you have to be when you tell the bot what to do? Like what conditions, because you don't want it to get in there and have it do everything you say it to do, only for it to have 100 losing trades at 2%, right? Like, or what, like it worked exactly like
Mm-hmm.
we wanted it to. We just programmed it wrong. Like, how do you, I guess you test it, right? You can test it.
Yeah, in TradingView, there's a thing called a strategy tester that that is it allows you to tweak your Pine scripts and then leverage back previous price action history across multiple time frames to tell you on each time frame how well this strategy will perform, whether it yields a profit or you incur a loss. And one of the things in the Trading Tactics YouTube video, he shows where initially he puts this strategy to test and tests it and determines that his long positions were mostly like 53% profitable, which is fantastic. Okay. But his short positions were only like 30% profitable, meaning he was losing more money. He was losing some money being short when the conditions were met to initiate a short position. He was losing more than he wanted to, and it begged the question was like, well, should I even be taking short positions at all? And you can, I mean, there are no rules. You just if you
Yeah,
want to
whatever you
only
want.
want to put if you wanted to make a trading robot that only took long positions, you can do that. But the idea is that as volatility comes in and out of markets, price will retrace, and why not take advantage of a pullback that meets the right criteria to from a risk reward standpoint and from a capital and if your capital preservation rules are still in play, then why wouldn't you try a short position, for example? So this Trading Tactics, fine gentlemen, we'll look at the YouTube video, we'll dive into the Discord, we'll look at how to implement this, and then we can set it up and try and test it at some point. I think would be a really good experiment to run.
Yeah, yeah. I mean, in the meantime, because the way I'm looking at this is like, yeah, we're learning to trade and we're doing that and we're trying to help other people learn. But if we're trying to make money, I mean, I think we just need to make more trades, right? And it almost like even as I say, I know how dumb it sounds. Like I want to learn to trade, so I need to make more trades to make money. But like just from a business standpoint, right? If this thing exists, and then when you're doing more trades and say we back test it, we see it works, you don't have to necessarily do a 4 to 1. Like instead of making 10%, you could make 2% per trade because you're taking 100x more trades, right? Like, does that logic make sense?
Yeah, yeah, yeah. It does. I mean, if you're working with 1,000 USDT in an account that is only losing, say, 0.5% on a higher volume of like short-term trades that it will take. For example, on this Ethereum USDT chart, the trading algo would see these candles and say, um, like if it were to break out of this range, like the Bollinger Bands are a good one to use in this case. It's an indicator called Bollinger Bands. You
Yep.
can Google it. So if this were to go high or were to break out, or if the cloud, the cloud and the Bollinger Bands would indicate, hey, momentum is going higher, or momentum suggests higher pricing, then initiate it along. And Once it pulled back, you got stopped out, and then it'd say, okay, momentum is going the other way. Now initiate a short, and it would try to keep longing and shorting, and getting stopped in some cases if it got a signal to put you in long. The miracle here is that your risk management would get you out if price went against you before the script reacted to go the other way.
If we do
And
this,
the script,
my account's gonna hate me.
yeah, that's all right. I mean, what a good problem to have if you're making a decent living with, instead of managing your trading account, you're managing some software that manages your trading account while you sleep, and your task becomes learning how to backtest and strategy test and make some fundamental assumptions about whether or not you need to like increase the risk that you're taking or decrease the risk that you're taking based on how the system is performing. But if it's performing and you're yielding, you're net profiting from the exercise, then that's a great problem to have,
I
in my opinion.
wholeheartedly agree. But yeah, no, I think that's good. Well, I think this is probably a good place to wrap it up. We're about an hour and 20 minutes in.
Yeah,
Uh,
I think
so
I agree.
awesome, man.
We'll
No,
take a
that was great. That was good. I'm glad we entered that trade. I think that's good to kind of watch and definitely learning experience. Pray to God that I learn how to use this on Kraken before I set up my KuCoin account. Oh, watch me like I've got three. I've got the trade order. I've got the trade order, the take profit order, and the sell order. Watch me initiate 3 trades and lose them all somehow.
Well, before we go, I'm looking at the spot Bitcoin price, like Bitcoin USD on Coinbase. Now we've had these channels drawn for, God, it feels like a century, but we saw this resistance level get hit in an uptrend until we got that like magical poking through 24,000, and that's where the market decided we're gonna basically, I mean, it shouldn't be a surprise. Volume kind of dried up here, and price drifted back down, and then we got this news, and we've pulled back to this level, which is not terrible. I'll go out to a daily time frame. If you look at the same channel, as these are daily candles, this was a nice move forward. It looks like we're coming back. And when you were messaging me earlier about 22.5,
Yep.
22.5 is right here. Okay. That was a perfectly reasonable thing to think. Okay, let's see if 22.5 holds the support, but it didn't. It has pulled
Yep.
back. It looks like 21.8, so just below 22,000. I think it's realistic to think that we have a couple more like candles lower into this support zone here. Like this is, I drew this box a little while ago. I think we come back and at least test this area to see if there's anyone willing to make a meaningful move long to then have it come back up here and try to get through this area. Another thing to point out on this chart, I drew this risk reward box. I mean, if we had longed on the big green candle there, we definitely would have gotten stopped today, and we would
Yep.
be reevaluating where we would want to get in. And ultimately, I think the decision would be like, okay, the next stop for this on the way back down a little bit. Again, not a bear case. This is just a market correcting a little bit after having a nice strong move to the upside, like pulling back a little bit. If you missed this move, you're probably thinking, golly, I really wish it would come back a little bit here. And this seems like a quite reasonable place to consider that, in my opinion. So that was just, I wanted to point that out on the Bitcoin
No.
chart.
Awesome. Really cool.
All right, super. That will that does it. I'm Ted, and this is Josh. And last but not least, just remember, uh, this is for information and entertainment purposes. I hope that at a minimum you find it interesting and useful. And remember to do your own research, protect yourself, manage your risk. If you do take trades, always trade with stop loss. Never trade with money that you can't live without. Don't use your rent money, because man, I'm telling you, there's a lot of people. You hear those stories, and I don't want anybody to ever come to us and say, "Gosh, I larped all my rent money in on this one, and now I'm in trouble." So, with
Well,
that,
and
I'll
yeah, yeah, that's the last thing we want. And then, what we'll talk about too is most of the daily videos will talk about trading, but maybe we'll try to do once a week where we talk about general investing in the crypto space and strategies around longer term investing. Because I think for the normal, most average person, part of what we want to do here is the trading thing's interesting. We enjoy it. We like talking about it. We hope that we can kind of gain a following and get people to join in and talk with us, give ideas and learn. But what we really want to try to do is educate people who aren't in crypto or are wondering why they should be in crypto, uh, why they should be, right. And if you're watching this, you most likely agree that this asset is something to be interested in and to invest in. But we want to really try to focus on ways to educate people and bring them into the space, uh, because we believe ultimately that especially with Bitcoin, that with everything going on in the world right now, you need to at least understand it. Maybe you decide it's not for you, and that's okay. But with the understanding of Bitcoin, you almost have to understand how your money works. And if we can help you do that, then that's a win in our book. So we'll do some videos on that too, along with the trading stuff. But yeah, to echo Ted's sentiment, just don't be stupid. Like, this isn't like rocket science, right? Like, take your time. There's always going to be a trade. There's always going to be markets. None of this is going anywhere. If it takes you a month, if it takes you a year, just take your time. There's always opportunities. If it's crypto, if it's not crypto, it'll be psychedelic drugs. If it's not psychedelic drugs, it'll be AI. If it's not AI, there's always something. So, with the trading aspect of it, there's no hurry.
Exactly. So, all right, we'll see you on the next one.
All right. See ya.